We've reached a deal. It's a good deal for everybody, I believe. And I think you were saying this is probably the biggest deal ever reached in any capacity, trade or beyond trade.
It is.
It's a giant deal with lots of countries.
Tensions between the United States and the European Union began escalating in early 2024, following the re-election of President Donald Trump. One of the key pillars of his economic agenda was reasserting American industrial dominance through tariff-driven protectionism. Trump accused the EU of unfair trading practices, particularly in the areas of agriculture, steel, and automotive sectors. By late 2024, the U.S. had already imposed 50% tariffs on imported steel and aluminum, directly impacting European manufacturers. In retaliation, the EU threatened to impose retaliatory tariffs on iconic American exports such as bourbon, motorcycles, and agricultural goods. Trade negotiations collapsed several times throughout 2024, leading to growing fears of a full-blown trade war that could disrupt global supply chains. In mid-2025, President Trump set an ultimatum of August 1st to enforce broad 30% tariffs on most European goods if a new deal was not reached. This prompted a surge of diplomatic urgency on both sides. Economists warn that such a move could result in billions in losses, higher consumer prices, and weakened transatlantic relations. At the same time, businesses across the U.S. and EU began lobbying their governments to avoid the confrontation. Agricultural groups in the Midwest, luxury car manufacturers in Germany, and even tech companies in Ireland raised alarms about potential disruptions. Facing the looming deadline, high-level delegations from both sides met in Brussels and later in Washington in July 2025. A major breakthrough came when EU Commission President Ursula von der Leyen agreed to increase European investments in U.S. energy and defense sectors, aligning with Trump's industrial goals. In exchange, the U.S. agreed to scale back the planned 30% tariffs to a flat 15% tariff on most EU goods. Both sides would retain some protections. Notably, the 50% steel and aluminum tariffs would remain in place, and the EU would continue subsidizing its agricultural sector, a long-standing point of contention. The final deal, signed on July 27, 2025, outlines several key terms. A 15% flat tariff on most categories of European imports into the U.S., including textiles, processed foods, and consumer electronics. Continued 50% tariffs on steel and aluminum. EU commitment to increase imports of American natural gas and military hardware, estimated at $120 billion over 5 years. Creation of a U.S.-EU Trade Council, tasked with resolving future disputes before tariffs are reintroduced. Both sides agreed to freeze any new tariffs until at least 2027. This compromise was hailed as a strategic win for both economies, with the IMF forecasting a 1.2% rise in transatlantic trade volume in the next 12 months. Markets responded positively to the deal. The euro initially dropped against the dollar due to tariff concerns, but stabilized after the agreement. European automakers saw a surge in stock prices, and American energy firms projected record export levels for Q4 2025. Politically, the agreement has polarized opinion. Supporters in the U.S. view it as a bold move to assert trade dominance, while critics argue that tariffs still hurt small businesses and consumers. In the EU, some leaders expressed discomfort over conceding to U.S. demands, but acknowledged the importance of avoiding economic escalation. Globally, the deal signaled that major economies can still negotiate effectively, even in an era of populist policies and nationalist trade agendas. Countries like China and India are now watching closely, as tariff diplomacy appears to be a new norm in global economics.